Greetings, beloveds. There are historical periods in a stock market where traders need to be aggressive. But first and foremost, I greet you in the love light of the one infinite creator. So now let's begin here. There's a level we need to understand, and to understand this level where traders need to be aggressive, especially if you're trading in the swing trade arena, you're looking for stocks, cryptos, whatever instruments in any market across the globe to move in the coming days, weeks, and months. This is where you could find some understanding and what to look for. So if we take the phi level, so we got phi, so 1.618. So to understand this, I'm going to keep it simple. There's many ways to arrive at the number that we're going to be using, but 1.618. So if we take 100 minus 61.8, we get 38.2. Now keep that in mind, 38.2. It's going to make things very simple. So what we're going to do here is, if we take 1.382 divide by 2, we get 69.1. 69.1. Keep that in mind. Now, if you're not new to my work, you know what I'm talking about, but there's also another way to do this. So between RSI 0 and 100, of course, we have the 50 level. So what happens above the 50 level tends to be different in terms of behavior to what happens below RSI 50. So I think we all know that. So what we can do here is understand that between 50 and 100, there's a certain psychology. So did you know that if you take 50 times 1.382, you arrive at the same number again of 61.8. Excuse me, not 61.8, my bad, 69.1, right? So you arrive at that number, 69.1. And this number determines when we should be aggressive. Let me show you an example. By the way, right now, we are looking at the NASDAQ trading above 69.1. It's trading at about, let's call it close to 70. So now, by the way, let me touch on a point here. You'll see that in a lot of the charts, the RSI setting is set for between 70, one area to watch for, and the other area to watch for is 30. I can tell you, just for my research, the levels is 69.1, which is what 70 is alluding to, and it's 30.9 for what the 30 level is alluding to. But anyway, so it's going to be 69.1. Right now, the NASDAQ is just a tad above that level. This has big implications. The last time we had a big market move, and we all remember that, is in 2020 and 2021. So you can see, especially this phase here in late 2020 into late 2021, there was a ton of money made here. Stocks were taking off, and especially if you play breakouts and leadership breakout stocks, which is what I specialize in, you can see that this was a very good period to be aggressive here. It could also determine that you need to hold on to your winners as long as possible. And you can see what really ignited this move here is when we moved above 69.1. It's very simple here. We moved above 69.1 right there. And before that, we had actually warmed up. This is a concept I call the foreplay method. You warm up here with this move above 69.1. So let me explain that again. This move here was also a strong move, but it warns you or tells you that if you revisit that period again, be on the lookout for a very aggressive leadership market, or a market that is going to really have oversized returns. So that breakout there was very self-evident for those who follow my work, and I did mention that now at the time. Now, one other thing we can look at is let's go back about 8 years. And again, we see there's another period when the market was very, very, very conducive for playing swing trades and for holding on to your gainers and for making sure you own the leadership stocks of the time. This period here lasted until we moved back below this 69.1 threshold. So you move above 69.1 here and you stay aggressive until you drop back below that threshold. So that's another key, is you can use that level here once you break below that level to understand that the market has changed its bullish ways and is now looking for sideways to down market. Same thing happened here. We can see we move above 69.1, and it's until we break back below this level here that we have this move down. Now I'll go a little bit faster, because once you understand this concept, we can look at things a little bit faster. So let's go 13 years back, and you can see there's another period here in 2013. This is the NASDAQ, by the way. NASDAQ monthly, I should have mentioned. NASDAQ monthly. And again, good evidence of why you should be aggressive in this period. Notice it can stay very, very conducive for breakout stocks for years. So this is 2013. We stay above that level for the next couple of years, generally staying above 69.1 on the NASDAQ until we drop back below this level here in 2015. So almost 2 years of a very nice market. All right, now one of the bigger time periods when we had a huge move in the market, huge, was from 2015 for the NASDAQ to, let's call it net to this drop here in early 2000. So we spent most of the time, not all of it, but most of the time in this period above the threshold of 69.1 on the NASDAQ monthly. Now, it might seem visually that this wasn't a big move compared to this move from 09 to the current highs, but that's not true. This is a bigger move, and that's one reason why owning leadership IPOs makes a lot of sense. If we take a look at the log scale for these moves, you can see that the move from 1995, so this move here is huge in terms of percentage return compared to this move from 09 to the current all-time highs for the NASDAQ. We can see here from 1990 to 2000, so that's 10 years. So 10 years, we gained almost 1,130% roughly for the NASDAQ. Here we've taken, since 09, we've taken 15 years, give or take, to move about 800%, sorry. So we can see that definitely this period here was a more concentrated bull market run with a bigger gain. And this is why it's important to always have some representation of IPOs, because that is when they move the biggest. And also it works for stocks and cryptos. Like I said, take a look at BTC here moving above 69.1 in, let's call it, late 2016. It stayed above that threshold until it dropped back below the level here after it touched 20,000. And again, we recaptured that level for another massive move here in late 2020. And we stayed above that for a while until we dropped back below the level, but not before we tagged 60,000+. And we can see BTC at the moment is trying again to recapture that threshold. Recently had a nice pop as it recaptured that level. So we can see if BTC is going to have a big run, it's going to be dependent on whether or not it can reclaim this level on the monthly. By the way, again, always emphasize in the early stages when an instrument is least known. If you take a look at the log scale for BTC, you can see that this earlier move in 2016 into 2018, this move here was big in terms of percentage gain. This is a huge percentage gain compared to this move here in 2020 in terms of percentage return. Now, if all of this is new to you, these are my own researched methods. The 69.1 threshold is a concept I came up with a couple years ago. Now, this and other original methods are some of the things I look for when I'm trying to decide what instruments I should introduce to my clients. I am Eric with Mother.com. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.